Achim here with Dimov Tax Financial Planning and Investments. I thought I'd do a video today of some general money rules. Obviously, I like the details. I like to go and have conversations with clients and really figure out exactly what they need based upon their spending or future spending in what they have invested or saved. But sometimes people just want some general fun rules as just good guidelines. So let's get started. Let's talk retirement ones. How about the 4% rule, or now the 5% rule, which is if I amass enough money in a savings accounts or investments, can I live off of just the interest off of it for 4% or 5% a year? That's based upon what you spend divided by 4%, tells you exactly what you need overall to save. The rule of 25, which is look at my annual spending. What's my annual spending? Multiply that times 25, and there you go. That's exactly what I should be saving total for retirement. The 15% rule, if you're in your early 20s, that's a good guideline. If I save 15% of my income per year until I retire, I should have enough to retire by then. A little bit further on that one, there's the 50-30-20 rule, which says 50% of what I make goes to my needs, 30% goes to my wants, and 20% goes to savings. That generally works as well. So, okay, how about investments? Allocation. The old one was if you take 110 minus your age. So, if you're 50, 110, that means 60% is left, or 60% in stocks. So 110 minus your age tells you what you should have in stocks versus bonds. The 6-month rule, 6 months worth of expenses. Expenses that you want to have an emergency fund so you can pay for expenses if something happens to your job or something happens. I would even go further right now with all of the uncertainty in the stock market and it going up so much and all this other, concerns out there. I would even go to 12-month emergency funds, raise cash now, because best thing to do is to invest when the market is down. And if there's a correction, it's nice to have cash on the side. Rule of 72, that tells you when I can expect to double my money. So any two digits, when they multiplied by each other, that equals 72, generally tells you how long you have to wait to double your money. So if I earn 8% for 9 years, I should double my money, or 10% return for 7 years, you're roughly there as well. But that's the rule of 72. And then 3-day rules. If it's a big purchase, wait 3 days and then make the decision whether you want to buy that or not. And I would go further to say if it's a luxury item, they say to wait a whole month. They say just wait a whole month, and if you still want it after a month, then think about it. Obviously, these are all very general advice, but I personally, like I said before, like to go into more details and print out reports so that clients can really see exactly, based upon their tax situation, based upon their investments, based upon the benefits they receive, Social Security, putting it all together in a more detailed report. But I thought I'd do a video just for some general advice. So let us know if you ever have any questions. We're here to help. Thank you.